What's up, guys? Welcome back to the Rollup TV. Today I have Robbie with me. No, I'm just messing around. What's up, Nick? Nick's in the building.
I wish I was Robbie.
Robbie's out this week, so Nick's going to jump in today and have some fun with us. We have 5 awesome guests. But before we get into that, Nick, for anybody who's new to yourself and what you do in the space, would love just a super brief intro about yourself, and then we can just jump in, man.
Sure. I'm Nick White. I'm Vice President of Celestia Labs. Been building in the crypto space for almost 8 years now. And obviously a big fan of modular blockchains and rollups. That's what Celestia is. It's a new layer one that's just focused specifically on data availability and giving developers ability to build full stack applications. So big fan of the pod, obviously known you for a while, and thrilled to be on today.
Sweet, man. Yeah, we have 5 awesome guests. Welcome on as a co-host. Should have some fun here today with the guests. We have Dimitri, friend of mine from Archetype. Going to be asking him questions just around the state of things in the VC. I'm really curious what he's thinking about with the Pump Fund ICO. I've been talking to a lot of people like on the ground, kind of more in the retail crowd, very bearish. Then like the VCs that I talked to, they're excited and they want to do the ICO. So curious what he thinks about that and some other stuff. We got DeFi Dad, Shiv from Boundless, Omer from Chaos Labs, who's getting into some scruffles with the Chainlink guys. That'll be interesting. And Camilla from the Defiant. So that's the list for today. Welcome back again, guys, to the Rollup TV. We got just a couple of minutes before we get into the guests. So we'll roll right into some of the first recent announcements. One is, Nick, I'm not sure if you saw, as of yesterday, there was a DeFi roundtable in DC. So the SEC held a DeFi roundtable to basically discuss a lot of the broker-dealer kind of rulings, what makes a DeFi protocol autonomous, insiders, token launches, how to actually think about these protocols as a whole. And I think we have a tweet to pull up from the SEC account, actually, that like overviews what I think it's Tom Atkins was saying. We can just kind of scroll down or Paul Atkins, just kind of scroll down and read this one. And yeah, basically what we have here is the key points from this day. For some reason, it's a little bit blurry on my side, but I'm just going to pull it up. But yeah, very clearly we are seeing the tide shift towards more and more actual regulatory action from the SEC. So I'm just going to read some of the most important points here that are on the screen, and then we can kind of just give our takes. Where we go. Yeah. Cool. Yeah, so here we go. I think Paul Atkins says he's grateful for the Division of Corporation Finance for clarifying its view that voluntary participation in proof of work or proof of stake network as a miner, validator, or staking as a service provider is not within the scope of federal securities laws. So that's pretty cool. What else? Greater flexibility to market participants to self-custody crypto assets. Pretty important part of the ethos, especially where intermediation imposes unnecessary transaction costs or restricts the ability to engage in staking. Many entrepreneurs are developing software applications to function without administration by any operator. Think of this kind of as like blockchains or networks. So yeah, a lot of just kind of like important things that came out of this yesterday. And I know that we've kind of been in this space for a while, Nick, where there's been more like, fuzziness than there has been clarity. But I think one interesting result of that has actually been a bit more leniency. I'm curious if you're like what your take on this general direction of actually finding regulatory clarity is. Are we moving towards something where there's going to be more restrictive behavior for entrepreneurs, kind of getting rid of some of the legal arbitrage that the space has had for a while? Is this healthy for the space as a whole to eliminate bad actors? What's your take on this kind of development from yesterday?
I'm glad that we're starting with this because this is honestly one of the most bullish threads I've seen from a regulatory body in my time in crypto. And for me, I tweeted this, but it actually restored my faith in the SEC and my faith in like the United States, frankly. I mean, I think you missed the second tweet in the thread, but it says the American values of economic liberty, private property rights, and innovation are in the DNA of the DeFi or decentralized finance movement. And I'm so glad to hear people say that, because when I see, you know, Liz Warren out there saying like, I'm building an anti-crypto army, crypto is evil, all this stuff, I can't help but think to myself, actually, crypto is America's, like the values of America are exactly the kinds of values that crypto kind of exists to defend, like giving people more autonomy, defending their rights. And it's so cool to see that the SEC is like actually saying that. And I mean, the rest of the thread is also just there's banger after banger where they're just kind of like, kind of finally just like saying all the things that the people that are in the space and understand how this stuff works have been trying to get across. And yet, you know, instead of anyone hearing us, it's felt like they're actively ignoring the truth or the reality of what the technology does, and trying to say like, oh, well, if you have a wallet, you are, a
broker or something,
dealer or whatever. Yeah. Like, and just like, dude, this is so absurd. Like, how are these people in charge of regulating us when they don't even understand how this stuff works, or their opinion is so far off of what is reasonable. It's like, how could we ever find like a common ground? And this thread to me is like, wow, they get it for the first time. And I feel like we're going to find like the path forward where we can be on the same side. You know what I mean? Because there are bad actors. Like, regulation is not, I mean, some people are crypto anarchists, like that's cool. But I do think there is room for regulation. There are positive aspects of that. And I'm actually, feeling excited that we can get to something real and productive.
Yeah. I mean, I think when Sachs was implemented as the crypto czar, and then Bo Hines came in, which I think Bo Hines might have been like, is that like a former college football quarterback or something like that? But maybe I'm mistaken. He came in, he was like, now he's the head of digital assets. Stani from Aave was just meeting with him yesterday at the White House. The Genius Act may pass this week. So, I mean, just broadly, the activity that's been happening is just extremely, extremely bullish. And I agree. I mean, it felt like there was just massive disconnect between where the actual people in the space were and what they were trying to get across versus how the regulatory bodies were, reacting to it. And I mean, now it feels, as you say, it feels like there's a through line that we can kind of both get behind. And I agree on the thread. I mean, that second tweet is just, I mean, it's pretty bullish. So,
yeah. Now, what I will say though, I mean, this is just a thread, right? So we shouldn't get ahead of ourselves here. And like, hopefully this actually turns into something real. But yeah, I mean, it's funny to think back to when SBF was still around and like the kind of regulation that he was trying to push on DeFi, which I think was actually not really, it was more motivated from a regulatory capture perspective. So I don't know, it's cool. Like we've been on such a journey, over the past 5-10 years here.
Yeah, man. Yeah. Rolling into the next one, I saw you engage on this tweet earlier I think it was yesterday. Haseeb put out a hot take, which I think is pretty funny. I don't know who started that, but I know that I was early to this hot take idea. Now it's like kind of like Twitter's turning into LinkedIn a bit, where you've got hot take as the title followed by, semi-spicy at best take. But I think this from Haseeb was particularly compelling for people who are analyzing how to think about, crypto networks and, Metcalfe's law and things of that nature. So Haseeb basically says we should stop talking about moats, right? Almost no products have moats, which I think is like that's the hot take. No products have moats. The better question is this product defensible? And I think you actually commented and said something about with regards to network effects being akin to moats. So maybe you could just explain your thinking there, because I think I may have a differing opinion, but I'm just curious kind of what your reaction to this was.
Yeah, I think, it's just an off the cuff thing, but I was thinking to myself, to me, the most powerful moats are network effects, right? Because those are very, once a network effect sort of manifests and takes hold, it's pretty hard to unseat, because they have such gravity, you know what I mean? And you have to kind of escape the gravity well, pull people out of that, into a new network. And so I feel like that's kind of what I was trying to say. But then Haseeb was saying that actually most moats are not network effects. Most are regulatory moats and lock-in moats, which, I kind of understand like a regulatory moat. Like, I think we've seen that throughout history where tech companies will go and lobby and like all of a sudden, convince the government to like put in these regulations to make it difficult for new entrants to come into the market. And they're so big and they know how to navigate these things. And all of a sudden, like they kind of, lock it down. The lock-in mode is maybe less clear to me. Maybe that's something similar to like AWS, where they have like an egress cost. So it's really hard to take your data outside of AWS. But
yeah, to me, the lock-in mode, it feels like, let's say you're building an integration for a certain protocol or for a certain company, and you go through all this work with your dev team to get this thing going and to get this integration live. And then, the moat for that company that earned that integration is like, well, the team would have to then go allocate all this dev resources to go and use a different company for an adjacent company for a similar product suite. So it's like you're kind of locked in by software or by your own internal budgeting or resources, or just like maybe like some sort of like contractual agreement. But I think more so what Haseeb's getting at here is actually just like, and Nick, we've talked about this, right? Where, there's the bottom of the stack for a lot of these different networks, and the top of the stack where it's very like user, touch point oriented. And a lot of like the middle stuff is kind of it's hard to see how long-term it has sticky value. And I think what Haseeb's kind of saying is like a lot of things in the world are just being, are commoditizable. Like, for example, AI is like every 2-3 weeks there's a new model that's better. There's a new company that's coming out with something better. In crypto, there's been so many different, infrastructure products, applications that take the entire market by storm, and then somebody creates something different, and then boom. So I think maybe he's trying to get at more of like this, like there's just a lot of this commoditizable things being built, but. Yeah, I don't know. I just wanted to bring it up to get your take and just understand maybe a bit better what he's thinking. But yeah, I mean, I think it's at least an interesting tweet.
It was definitely an interesting tweet. I think one of the takeaways that I saw in the rest of the discussion was just, you got to execute. Like a lot of times, that's how you win. It's just staying ahead, working harder.
Yeah.
So
cool. Alrighty, up next, guys, we have Dimitri. He's in the back end here. Dimitri is a good friend of the show. Actually, the first time probably on the show, but good friend from New York, from Archetype VC. And I've been starting all of these VC conversations with the question about Pump.Fun and what they are seeing with regards to the appetite for that. So I think we'll start that one here as well, and get Dimitri up. And just get some insights on the state of the VC landscape and what's going on. So, and he's got the Jack Butcher checks in the back, which was a bear market classic from the NFT cycle. Dimitri, how are you, man?
Good. Thanks for having me.
I see you're in the office today, working hard.
Yes, sir. Hey, Nick. Good to see you.
What's up? What? Tell us the story of the blue checks. What is that? Is that like UI design or something, or like reference to something?
We have some good artwork here. It's the work of Ash. Also, he painted this one right here. So we're very art forward over here. We have a couple of images.
Great. I think I've been to your guys' office. It's in Soho, right?
Yeah. We do a lot here. We do monthly events. We have about 2,000 people come here every year across all the events that we do. So nice. I think we saw each other at some point last year.
You're in the epicenter.
Are you guys hosting some stuff around permissionless?
Sorry, say it
Are
again.
you guys going to host some happy hours or meetups around permissionless?
We are
Nice.
doing a happy hour the week of permissionless, and we are likely also doing one of our monthly research days. Topic TBD. But yeah, that should be a fun one.
Cool. All right, let's get into the meat and potatoes. Dimitri, appreciate you hopping on today. As I said, I've been asking a lot of my just general venture friends and people in the fund space what their thoughts are regarding this $1 billion raise from Pump at a $4 billion FTV. And again, the consensus that I've found within the retail markets on Twitter has been very bearish, very extractive, which is kind of classic crypto Twitter. But then on the venture side and some of the fund side, they're seeing real appetite for wanting to actually participate and valuing this thing, something like a hyper liquid L1, like kind of, somewhere in that like frame of reference. So I'm curious, are you bullish or bearish on Pump.fun at $4 billion? And what's the kind of right way to think about this raise?
Yeah, I think it's going to depend on to what extent they actually want to have direct value accrual between the revenue and the token. I think that's the simple answer. I have a ton of respect for the team around their execution, around their hustle. Are we participating? No. Am I participating personally? No. Do I think it'll make money? Yes. I think a lot of the narrative, which we've seen with Hyperliquid, is to what extent is value being passed on to the actual token holders. I would actually disagree in that it's an extractive protocol because there's a willingness to pay. Like if you don't want to speculate, don't use the website. So I think it's not wrong for there to be a take rate. It's more of the question around what percentage of that take rate is being passed on to the token holders.
Yeah, and I saw that they were putting out, or I think the block put something out that said that they were going to return that to investors, like of some, or stakers, or holders of some capacity. So, all right, well, you're not going to participate. That's good to know. Just kind of getting the overall consensus here. So, moving on to some of the more technical stuff and some of your latest research. You guys have been kind of going deeper into some of these quantum networks, and I think there's this larger idea that kind of haunts some of the Bitcoin community, which is, and just general proof of work community, which is that quantum could take down their consensus algorithm. I'm curious, through your work or kind of what you're seeing, like, will quantum take down Bitcoin?
Mm-hmm. I think the short answer is yes and no. On the yes side, I think the developments in quantum are happening faster than we originally thought. So I remember going to a talk, seeing a talk from Dan Benet in 2019. And he said that if you apply Moore's law to the number of qubits that we can sustainably produce, so it doubles about every 2 years, it would take about 30 years before you can break RSA. That would be around 20 million qubits or so. A few weeks ago, there was an announcement from Google that said that they had increased the effectively of improving breaking RSA by about 20x. And this is using clever error correction tricks and better algorithms. And where we had previously thought it would take 20 million qubits, now it seems like we could do it with 1 million. So I'm not a cryptographer or a physicist, but you can imagine that the curve is arguably shifting faster than we thought it would. I think the timeline that I've heard from folks is between 5 and 15 years around being able to start to break these prime number based encryption algorithms. Why is it scary for Bitcoin? Because the entire premise of ownership in crypto is based on digital signatures and private keys. And if I can forge a signature, I can claim to be anyone because there's no actual identity tied to the private key. So I think that's a very real concern. the reason why I say it won't take down Bitcoin is very simply because there's too much value at risk. And it's not a research problem. It's actually a implementation and coordination problem, because we already know how to do post-quantum secure signature schemes. But it's like, how do you actually get the ecosystem to adopt it? And we generally understand the design pattern of how this might work, and you can effectively wrap a public-private key pair in a post-quantum pair. So you effectively have almost like a bulletin board of ownership to go back to. That is a user-driven approach where you could have users opting into actually doing this attestation. At some point, I do think there will likely be a hard fork. The scary part about post-quantum is you don't know when an adversary has the actual capabilities and if they are going to be public about it. So there's some weird game theory around when you should actually start to worry. And I think that's more of the conversation now with founders and with the broader community. It's like, when do we actually start to credibly move towards some post-quantum secure scheme?
Yeah. So are these projects then like investable from a venture perspective that are aiming to like either solve this or build a resistant blockchain then? Is that kind of how to think about it? Like there's quantum resistant blockchains being built?
It's a known unknown.
Okay.
There are quantum resistant chains. There are also other flavors, almost like quantum resistant, like wallets or custodians is maybe a closer analogy. There are projects out there that are anticipating some willingness to pay. Maybe a framing is insurance. You know, from an ecosystem-wide perspective, how much is an individual or an ecosystem willing to pay? That is, I mean, I think we're still a bit too early in really understanding that. But I do generally think there's going to be a coordination failure. You know, like we have seen how slow an ecosystem like Bitcoin is around any real software upgrades. I think it's high probability that this would probably need to come from users first. You know, whales who are too scared of that possibility, and so they might say, okay, I'm going to like take this action. I might be willing to pay some percentage of it. That's what a couple of these projects are banking on right now. Philosophically, you know, that probably does not feel good with a lot of the hardcore Bitcoiners.
Yeah.
But that's the thinking right now.
Very interesting.
The interesting thing to me is that it's not just blockchains and crypto that have this problem. Like the whole world runs on cryptography, like the internet runs on cryptography. We're gonna, like, everyone's gonna have a problem here, not just crypto in isolation. So how is the whole world gonna manage this whole coordination thing? Is also an interesting question. So I guess people shouldn't just single out crypto and say, oh, crypto is screwed. It's like everyone's equally kind of screwed, I think.
Totally. Yeah. I mean, if encryption breaks, we have quite a bit of issues to deal with.
Yeah, you could say that.
So another kind of sector that we've been actively investing in a bit with our fund and have really actually seen more growth than, you know, in the real kind of lens of adoption outside of the digital world in the physical world has been around some of these decentralized physical infrastructure networks, DeFi networks. You guys have been pretty active in that space, from what I understand. I'm just curious right now, like, what is the landscape for DeFi? Like, who are the top projects that are actually moving the needle in terms of like real users and getting serious adoption, whether they're in your portfolio codes or not? And then I'd like to kind of just get a better understanding as to where you're seeing like actual either niches or of areas where there's actually like untapped potential. It's kind of how you're thinking about it as well.
Yeah, for sure. I think a lot of this data is public. I think Helium hit 1 million monthly active users. Fact check that. And Drina and Dawn are doing great. They're more on the fixed internet side of things. Real users. So I think on like the telecom side, I think that's super interesting. I think Glow is doing some really cool stuff on the energy side around solar. A lot of tailwinds there. I think on the compute side is where I'm particularly interested in over the next few years, because the scale of demand for that, I think, is going to be much larger than we think. Just today, we saw OpenAI sign a deal with Google Cloud around compute capacity, and that's a direct competitor. So this company has $10 billion in ARR, and they're saying we need to work with a competitor because we do not have enough compute. And then on the micro side, I've been chatting with companies that they're doing multimodal inference. This one particularly around deepfake video, which is separately terrifying. But it cost them $1.40 per inference, and that does not scale. The moment they hit PMF, they're probably out of money in a few months. And so we're seeing on both the macro and the micro side, there is quite a bit of demand for compute, and it's crazy to me to think that it will not be decentralized compute providers that are filling that gap. I think the issues historically has been around SLAs and DevEx. And I think a lot of the teams are waking up to understanding they need to solve that pain point, and it needs to feel like a Web 2 product or service. But I think a lot of the decentralized compute plays are going to be looking quite good in a few years.
I have a question on the decentralized compute thing. From what I understand, it's not just getting enough GPUs and things like that, but also a power. Like, we just don't have enough power on the grid. Do you think that DePIN? I've often heard about like power DePIN plays. Do you think there's something to that as well? I guess power generation might be a little bit difficult to do using DePIN, but I guess maybe not.
Essentially, I think there might be an analogy with how the Bitcoin mining industry played out, where you saw pockets of data centers pop up in regions and geographies where the cost of electricity is cheaper.
Yeah.
And I think we are probably going to see a very similar thing, but those data centers are not going to be hosting ASICs, but they'll be hosting A100s, H100s, 5090s. So that makes a lot of sense to me. And so we're just having economics dictate the actual geographies. And then the hard part about DePIN compute coordination is how do you effectively coordinate heterogeneous resources in a way that your overall network is not the slowest link or the weakest link. And especially if those resources are very globally distributed. And there's some clever ideas around how to do that well. But yeah, I think that's the initial thought.
So if your core thesis then is around compute demand being consistently increasing, which it really has over the last couple years. Hospitals used to be the largest intakes for energy, a couple hundred kilowatts per hour, I believe, or up to a gigawatt. Now data centers have like tripled what hospitals even have. Chamath has just bought a ton of land out west to build his own data center for a company. So if this is the core thesis that you and I suppose others have with regards to where the future of AI and DePIN is headed, what are some of the second and third order consequences? You mentioned decentralized compute. I'm curious from your investment portfolio perspective or your thesis perspective, like if the demand continues, then how does that value kind of streamline down towards other parts of the stack? or even other industries? And maybe you could talk about some of the players that you guys have invested in, or just general sectors that you see as being uplifted as a result of this trend.
Yeah, I think there's a lot on the application layer, especially once you're able to collapse the inference costs down to something that's consumer friendly. This can be like vibe coding games, for example. Like there's a project called Farcade that allows you to effectively have a prompt that says, I want to create some game. And it's very elementary. It's hyper casual, mobile first. I can imagine there being potentially a foundational model or a fine-tuned model just for game generation. And then you have, you effectively open up the universe of content creators, because you're no longer bottlenecked by the actual technical capabilities of creating a game. So I think that's one example. I think there's a lot of very interesting AI based social networks that can pop up, where you are actually interacting with content that is not generated by a human. There's a lot of profound effects, I think, that will happen around like how people are interacting with content that is not generated by humans themselves. And I think to get there, we need to collapse the cost structure of inference. So I think that's going to be a pretty exciting enabler for applications that we previously couldn't have.
Dimitri, I think we're running low on time. I appreciate you coming out today, joining us. Look forward to hanging out later this month around permissionless, and I'm sure you guys will have a happy hour. I think we're going to host one as well. Yeah, thanks for the insights on DePIN and how you're thinking about things. It's always good to hear, because we don't spend much time on these topics, but it's good to just understand them more holistically.
Yeah, for sure. Thanks for having me.
Cheers, man. Yeah, I mean, that the compute thing, Nick, is something that's been particularly interesting, because I think like there's got to be a point where this, like, it's the demand is going higher and higher and higher, but at some point something like DeepSeek is going to keep happening, where you get the same or very close to the level of performance on some of these models for much less. And I just can't help but think that all these people that are investing into compute, perhaps in, I don't know, 5-10 years, there may be a bit of a slowdown, but at the same time, I don't know, the whole world's heading online. Everybody is going to want to run LLMs locally. Maybe this compute demand just goes up exponentially for a lot longer than a lot of us think. I
mean, I think it's pretty clear. I think we're still very early in this whole AI sort of macro wave. So I definitely would not underestimate the demand growth in the future. So I personally feel like we need to keep building, and not just for inference, but for pre-training. And the irony is that the AI industry is kind of running into the same, like, different kinds of red tape, but like, it's just hard to build new data centers, hard to get like, new power sources online and things like that. And that's one of the constraints. It was similar to how, I don't know, crypto's just been like red taped off of innovation. And I think this is what like the challenge is facing the US, is like, how do you stay competitive in a global stage in technology when you have so many limitations into what businesses can do and how fast they can move, right? It's clear that people like Elon Musk or Sam Altman can move as fast as anyone else, any other entrepreneur anywhere in the world. But, a player like China, with the actual sort of like government's backing, can supercharge these things. And so we got to stay competitive. Maybe DePIN can help. Yeah, I mean, I think he mentioned Helium having I think 1 million monthly active users, but I think actually they had 1 million phones on their Signal network in a day, which I thought was pretty interesting. And so basically, like, what I also heard with this, which is a little bit, tangential to the AI stuff, is that these kind of telecom-based service providers, so Helium does a lot of like Wi-Fi
they have like these little boxes that do Wi-Fi, kind of like a router. They've actually they've gotten into their hands full from having telecom companies, Wi-Fi providers like your Spectrums, your Comcasts, etc. Actually, it goes against their terms of service, and so they're trying to figure out how we can implement these tools into our consumers' homes without having them do something illegal to their current contract. So that's also like a kind of like this red tape that you speak about as well.
Yeah, interesting.
Up next, I think we got DeFi Dad coming up. He's been really bull posting Ethereum. I think he's been holding on to Ethereum quite tight, and is going to be talking to us about the state of DeFi, some of the crypto media work that he's doing, and more. It was good to have. So
I think the Ethereum bulls will be vindicated. I think it's actually pretty absurd that ETH went back down to like 17 or 1400, like just like a month or two ago. It's pretty absurd to me. I mean, it is, after Bitcoin, the most important, most significant, most lindy, like largest community, biggest mind share protocol in the industry. And I don't think that doesn't just evaporate overnight. And it's not like, oh, Solana's success means necessarily Ethereum fails. You know what I mean? I just don't think it's necessarily zero sum. They each have their strengths and weaknesses. So excited to hear the bull perspective from DeFi Dad. He's been in the space. I mean, I remember like in 2019, I feel like even before it was like officially DeFi summer, I feel like DeFi Dad was out there creating content. He's like a true OG.
Yeah, he definitely is. And actually I have some interesting things more with this like kind of KOL marketing meta as well. Some thoughts about like his, just being a dad in the space, I think is interesting. Like I'm just gonna ask him like, so what do you tell your kids that you do? Like,
yeah.
What is
it's probably
life
easier to explain to your kids than your parents.
Yeah, I bet his kids have a crypto wallet. I think he should be coming in just 1 minute. I think he just got caught up a bit there. Usually play this game with Rob here where you check the price of BTC at the beginning of the stream and you predict whether it's going to go higher or lower. It's looking pretty good right now. 108.9 across the board. Stocks looking like they might go to all-time highs pretty soon. I think people got really, really scared in the broad macro sense. And today USA and China also had some of their last talks around just kind of like coming to terms on the tariff side of things. Mm-hmm. It just seems like Trump is doing the old like swing the bat hard and then walk back to home plate after you get called out at first base type of vibe. It's just this constant like treadmill of spinning, which I think is a strategy of his. It's like flood the zone. It's like flood the zone. Just give him hell in every which way.
Yeah, it's interesting. It's so hard to tell with Trump whether he's actually playing 4D chess or if he's just a very volatile person, maybe a bit of both. But there's the whiplash is real. And the crazy thing is when you have someone like that as president, it just causes crazy stuff in the markets. Because, I mean, the guy says something and like all of a sudden things can just change, on a dime. So it's entertaining. It makes for good television.
It does feel like American politics is a bit of like the world's theater.
It's like a reality show. Right? I mean, with Elon Musk crash out last week.
Dude, that was
literally
crazy.
Like a reality show, dude. Yeah.
Man, so do you think that Trump's actually in the Epstein files?
I mean, probably.
Yeah.
I mean, is there anything damning? Like, I don't know.
Yeah.
I mean, yeah.
Yeah, it's pretty crazy. Yeah, Trump, and then now there's tweets today from like some like news account that's like JP Morgan CEO or executive says that he thinks Elon Musk was doing a calculated move and that he's trying to get more attention to the fiscal policy of the U.S. and things. So I don't know. There's just a lot of stuff going on, but it does feel like the accelerated timeline of of just kind of like variable randomness, things just keep happening, has been speeding up more quickly than we've ever really seen. I think it is kind of like a byproduct of Trump's volatility from the top per se.
Yeah, when Trump got elected, I thought there's like two possible things that can happen. One is, and they're not mutually exclusive. One is like he actually does follow through in his pro crypto promises. That's actually come true. And then the other one was, I just had a feeling that he's going to be very volatile and destabilize the world. And frankly, that's actually like also bullish for crypto in a sense. Destabilize markets, maybe not bullish for crypto in the short term, but definitely bullish for crypto in the long term, because it makes it more obvious we need a new coordination layer. We need non-sovereign money. We need a new financial system.
Yeah, I mean, I think Bitcoin's narrative has never been stronger, right? For just the entire use case of Bitcoin. It's finally getting into that. It's finally getting into that, like, digital gold, store of value, place. So,
yeah.
All right, we got DeFi Dad joining in. Getting him set up, and we'll get him up in here. We'll get you unmuted in the meet. Yo.
Oh, you're muted.
How are you, man?
There we go.
I love the hat, man.
Yeah, nice to meet you too, officially. Same to you. I was just telling Andy before you hopped on that I think I've been following you since like 2019, or I don't know, even before DeFi was really a thing. I feel like you were one of the first people to really like double down on it.
Well, I wish I doubled down on Celestia. I wish I saw the light earlier. So yeah, it's been remarkable to watch you guys grow.
Thanks.
Yeah, man. It's good to have you back. I think last time we spoke on air, Rob and I were on your show. I think that was maybe the end of last year or early last year or something.
Yeah, you guys have. I mean, you were already. You had clearly a big following and a lot of success. But it's really cool to see you guys running the Rollup TV here. I've done a few live streams for big conferences online. This was back during COVID. I think we did one of the ethereals through Vimeo, and man, I learned an appreciation for everything that's going on here. I don't think people realize how difficult it is to pull it off. So shout out to Alex here, who runs everything behind the scenes. It's really not an easy job, but yeah, excited to talk DeFi and crypto and the bull market. Yeah, whatever you're up for today.
Yeah, man. Nick and I were just saying that you have just been a steadfast ETH bull, and Nick was saying that he thinks you'll be vindicated in a big way. We had Arthur Hayes on the podcast maybe just 3 months ago or so, and he was like, "Look, I think ETH is getting hated on too much. It's going to be one of the leading L1s off of the lows." Here we are today. Man, has your bullishness on ETH been shaken up in the last 6 months? Has it not been? Has your conviction been tested? How are you feeling just overall?
I've definitely never had my conviction tested so much in the past year, maybe 2 years. I still look at all of this through the lens of being a user. I'd love to wax on with different theses as an investor, but because I keep the majority of my wealth on chain, and I'm actively using old and new DeFi. I'm well aware of the decision process that I go through, and I'm imagining folks with lots more money to manage are going through. And so something like Ethereum L1, it remains this, credibly neutral platform that, we know when we go to sleep that we'll be able to retrieve our assets. I remain extremely bullish on the multi-chain thesis. I think it's actually already played out. I think we've got these very unique economies on L1s and L2s, and I'm absolutely all for it. But at the end of the day, there's a reason that so much liquidity has, accrued to Ethereum L1. So I think my own portfolio reflects this. I'm on Solana, I'm on every L2, I'm on Cosmos. I'm extremely grateful for all the builders across these different networks. But at the end of the day, again, I am most confident to retrieve my assets from L1. And that also too is probably due to a number of protocols there like Aave that have just been battle tested for so long. So yeah, that's how I'm thinking about it from a user standpoint. And I guess as long as ETH remains this pristine collateral that we rely on to borrow against and, you know, create a leveraged position and be able to stake and be able to lend, I think things will play out. But no doubt, it's been brutal. Like I will not pretend like it's been an easy last few years.
Have you been actively trying out any particularly new primitives that you think are exciting, right? Because I think a lot of the DeFi stuff that we originally got involved in, both of us, was like it felt like there was something new quite often, right? It was, you know, there was Uniswap and then there was X and then there was Y and then there was Z, and it just kind of kept coming. Things have gotten marginal improvements across the board for different, you know, specs on a DEX or different ideas on lending, but there's also been some kind of standout winners in the last, you know, 18 months or so in DeFi. Curious, like, who you think these are, or if there's any on-chain primitives that you've been particularly excited about that are compelling.
Okay, so above all else, I'm as bullish as everyone on stable coins. Now, what I'm bullish around is the yield that you can achieve on chain. I think the fact that it is simple to get, you know, double-digit yield, even though, like, I think of something like Aave as like the benchmark rate still. You know, I can earn like 5 or 6% on Aave, just lending something like Tether or USDC. We actually just did a podcast with the folks at Level. And by the way, I'll call out if I'm ever invested in a team. I'm not invested in Level, but just kind of blown away by, you know, their vision to create more competitive yields that, you know, I want to say are ballpark around like 7 to 10%. They're recognizing that there's an appetite on chain among degens to be able to earn much more competitive yields, but that there's big money coming on chain now that, you know, the US government has signaled that they're actually looking to encourage money coming on chain, that they're looking to encourage the use of stable coins. So Level has been one that is really like capturing my attention. I mean, I want to call out Fluid. Fluid is, you know, being the team behind Instadap. They reimagined how you can blend lending and a swap or a DEX. And, you know, there's some real innovation there, like being able to hold a debt position or just a loan. You know, if I put up something like CBBTC or Ether and I borrow, normally I would borrow in a single stable coin like, you know, Tether, USDC. But for someone like me, I don't really care if the debt's denominated in either. I see both of them as extremely reliable. And so anyways, you can hold an LP position where basically someone comes in and they're ultimately swapping through something like CowSwap. It gets routed through Fluid DEX. And then my debt is actually denominated then in Tether and USDC. And so I'm earning these little trading fees along the way. So that there's been radical innovation there from the likes of Fluid. Another protocol that recently launched is called Infinify. This one, full disclosure, I invested in this in the seed stage. But Infinify is looking to tranche basically two different types of lenders, folks who want a more conservative yield, but they want to be able to instantly withdraw, versus those who are willing to lock up for, let's say, 90 days. And so the folks' money that is locked up for 90 days, they're using, you know, basically the model that like a bank would use, and they're taking a portion of that money and they're earning an amplified yield for both parties. So the folks that are locked up longer earn a bigger yield, and then the folks that are locked up for a shorter amount of time who can instantly redeem their money, those folks are actually also earning an amplified larger yield. One other one, Euler, I think Euler's been a remarkable story.
Yeah, man, insane.
Right? They went to almost zero in terms of liquidity on the platform, and the founder, he actually was with his wife. They were like having, I think, their second child, and this was like days after it. So it's a pretty brutal story for anyone who can like empathize with another human being, like beyond what we see on chain. And so Michael and them kind of went back to the drawing board and thought about modularity, very appropriate for this show. They thought about a more modular lending platform, and they foresaw this. This is something I personally I absolutely never foresaw this trend. I think like Steven from DeFi Dojo was really on top of this trend with looping. Just the fact that we would see more reliable money Legos, we would see more competitive yield-bearing stable coins. And by having that yield-bearing stable coin and a borrowing rate that is less than whatever the assumed yield is, let's say you have something like Syrup USDC, I think earns around 10%. If you can borrow at a lower rate, you loop that up, and now you're earning something like 20%. So there's been a number of teams that just really foresaw that trend. Maple too. I guess Maple, that's maybe one last one to really call out. Maple came back from the ashes. I mean, they got absolutely wrecked by Alameda. They were doing unsecured loans. They had a model that was really compelling, but that model got blown up by bad actors, and they went back to the drawing board and thought about how can we work with what is working for our users and our borrowers, and how can we redesign it so that folks can earn reliable yield, and we can get back to doing what we do, lending to institutional borrowers on chain. So like just blown away by what those guys have accomplished. I mean, there are many founders that would have just called it quits and walked away from it. And I think we should be celebrating these founders who really stick with hard problems over, the long term. Nick, you guys too, like you saw something that none of us saw early on, or actually there are a few. Maven 11 saw what you guys were building. So
thanks. Yeah, I completely agree. I mean, I think part of being a founder or builder is just having the conviction in what you're building and seeing it through. And someone, like the Euler founder, to go through something as, I mean, I feel like almost like 99% of people that go through a hack, I mean, it just devastates the community. It devastates everything. So to come back from that is uber bullish. Like, that's insane.
Yeah, I agree. And I think Maple in particular was actually doing, as you said, they were doing unsecured loans. They had very little demand, actually. Then it kind of started to pick up finally, and then FTX happened. So it was like they were getting going, and then boom, instantly wrecked. And now they're like, if you look at the revenues and their TVL, it's very impressive. I think we'll have Sid on here pretty soon to talk about that and kind of the comeback story there. I had a different kind of a question here for you guys. DeFi Ignis tweeted, unpopular opinion, airdrop should be vested, especially for KOLs. Current playbook is claim airdrop ASAP and sell, move on. The vesting playbook is airdrop launches at a high FTV. You get a huge airdrop, you feel rich, but you need 6 months until tokens slowly unlock. What do you do? Continue to be bullish, post about it, check on the community sentiment, and you're aligned in the longer run. And I think he's getting at a bigger problem here, which is that there's just a shift happening, I believe, with some of the Kaido mindshare stuff, with different ways that teams are thinking about allocating capital to, KOLs, to podcasts, to advertising, like, you and ourselves. And so I'm just curious your thoughts on this tweet and really on this broad like change in how you're seeing teams allocate, whether it's like advertising dollars or marketing spend, or just kind of broadly thinking about how to do community building nowadays.
I can speak firsthand to why they should vest those airdrops. Whether it's a KOL or anyone, I think KOLs have been at the forefront because Kaido has figured out a way to quantify mind share, and as a result, we have all these folks competing. I think there are folks like probably us here where I just tweet about what's interesting to me. Like, I don't have any sort of paid tweet model. Like I sometimes I wish I did, like given the rates I've seen going for other folks out there. But like what happens is we're tweeting about what's interesting to us. There's other folks that I give them credit, like they're grinding to contribute to early stage protocols so they can earn that airdrop. There's nothing I think malevolent about that. And so at the end of the day, when you get that airdrop, I'll speak as a US citizen. As a US citizen, I have been through pure pain for years. This goes back to 2020, 2021. I didn't sell a single airdrop. I held on to absolutely everything. And for the longest time, it was the greatest reward. I felt like a complete genius, for holding on to these tokens. And then at some point, those tokens fell off a cliff in 2022. So let's use Uniswap, for example. I earned that. I think I earned, let's estimate that it was at some point worth like, I don't know, $10,000 or $20,000. By the end of 2022, it had dropped to below below the price point at which I received it. The IRS doesn't say, hey, we understand you were extremely loyal to Uniswap. Kudos to you.
Imagine if they did, though.
They just want to get paid. They want to get paid based on the USD value. So, this is something that I can't recall the dynamic that you guys would have been through, Nick, with Tia, but for anyone that received an airdrop, a life-changing airdrop, I mean, good for those folks. But like as a US citizen, we are fully incentivized to sell it on day one, because if you don't, you risk holding something that drops in value to a point that it could actually be worth less than what you owe in taxes. If they vest it, they actually solve all of the problems. I love Sablier is a tool that teams have been using to vest tokens. There's also sorts of other tools, and folks will they'll create their own contracts to vest these. But you are doing us a favor, even though like maybe from a profit perspective, if you let everyone just claim on day one and sell, the folks that get in the fastest and choose to sell, they might do well. I hope they like live in pain as the token goes up. But like I think they're actually doing you a favor to vest those tokens. And I know the DeFi.app team just went live today with their token. And full disclosure, I invested in that team. They have vesting terms that carry everyone out. I believe like a year. This was all public because of there was an echo round. These are terms that are demanded by tier one exchanges. I'll let everyone know. I'll let everyone in on a little secret. I've seen this happen so many times that like it's actually not a big deal. Like I know like you signed up for XYZ terms, but this is what really the best teams are having to adhere to. And to Binance's credit, like criticize them for whatever else, they have pushed for some like higher standards there recently. I don't know what they did in the past. So I like the idea of vesting. I think it actually protects everyone from day one dumping. You also then have to like be mindful of like, where does the cliff happen? You don't want too much liquidity dumped on the market at once. So
Yeah, I think that tax nightmare is something that all of us are familiar with who are active on chain. So I'm glad that you bring it up.
Terrible stories.
One last one for you. This is actually from our good friend Grant from Blockmates, and I think it's kind of something similar. A similar thought process, which is around this Kaido and this mind share thing, which is he wrote the problem with crypto marketing roles. Assuming you're a CMO or a marketer at a company, is that if you dare to deviate from the current meta and don't see immediate result, you run the risk of being fired. It's much easier for your career safety to just do what everyone else is doing. And because the best teams have founders who get out of the way and let marketing creatives go to work and create the new thing that works for everyone else to copy. So I'm just curious what your take is here on Grant. Is Grant right? Have we reached a point where, deviating from the marketing meta gets you fired faster than failing? Or kind of how are you seeing this, like the strategy from teams that you're working with or projects that you invest in, create their own path, kind of do the copycat model? What are you seeing out there?
Yeah, so there is an expectation of how marketers or business development folks, community builders, how they should go about their job. And this is also reflected in investing in the space that, you know, if you're working in a fund or you run a fund, a year ago, people, LPs, investors were asking you, what sort of meme coin exposure do you have? Now, if you had a thesis that meme coins were probably like a fleeting narrative, but like there's a long-term value to specific meme coins that cross the chasm and become, you know, viewed as like a blue chip, like something like Doge or Bonk. Like they have these really great stories behind them, and they have such a distributed token holder base that they're able to be viewed as more blue chip. But I guess my point in saying this is it's very difficult to be left to your own devices to do your job. And I think like as an investor, your job is to seek outsized returns, I guess, unless you're running a liquid fund, and then that's a totally different approach. On the marketing side, I mean, you're just under the gun because at the end of the day, there's a scoreboard that is the price of the token. So if you're in a project before the token has gone live, I do believe you have a bit of patience, you know, on your side. However, there's metrics out there like your follower count on Twitter. I've seen this with, you know, so many different teams, and, you know, like word to the wise, like most of the followers out there for projects, you know, they're bought or they're, you know, acquired through some sort of like click farm. It's very rare that you will find, you know, like 100,000 real followers. And I think this extends also to the new mindshare campaigns. I think what Kaido's doing is compelling. I do think it's here to stay, but there is a problem with, like, they call it the AI slot bots. Actually, Grant has been all over this. Grant from Blockmates. Like, they're just really messy conversations that we see. When I post something on Twitter or X, I rarely see what I know to be like real humans anymore. And I've got to say, it sometimes gets a little dystopian. It almost feels like crypto Twitter looks more to me like what I thought of as LinkedIn. Lots of like canned responses, lots of people sort of like policing what they say. And I think for the three of us here and lots of other folks in the space, I think we come from like an era where there was really thoughtful conversation and there was lots of fighting online, but you learned a lot from that. It's still there. Nick can attest to this. He has to, you know, wade through all sorts of debates to defend Celestia over the years. It's not easy, but that's where we learn the most, from having those sorts of conversations. So anyways, I have a lot of empathy for the marketers out there. And I think it's one of the hardest jobs. They're handicapped and not able to use, like, maybe the term is handcuffed. What's They're not able to access Web 2 tools that are accepted in the Web 2 like tech world, because those tend to, you know, rely on, you know, data that we would all frown upon.
Facebook
we don't look
Pixel, stuff like that. So
it's hard. Like, whoever is a marketer out there, if you can do your job well, you're going to be paid very well in the future. Just one thing, make sure you get, you know, some sort of token allocation, because, like, I don't know why anyone would work on a protocol without a token allocation. Like, that's where the real alpha
is there.
Yes.
DeFi, I appreciate your time, man. Thanks for coming out. Have a great
Thanks for having me, guys.
Day. And I'm cheering for ETH right alongside you, us both.
Oh, please. Yeah, my bags need it, but yeah, the sentiment has shifted. We are on the upswing. New all-time highs very soon. So
oh, look at that. There we go. All right, buddy. See you soon, man.
Thanks, guys. Bye, Andy. See you, Nick.
That's some good stuff. I actually think he's right though about ETH price, but we don't need to speculate too much. But it feels way better than previous.
All right. I mean, whenever something is like the most hated, that's when it has the most opportunity to bounce back. You know.
Yeah.
Like the cringe
point of maximum financial opportunity. Yep. Right. So
yeah, it takes a while to learn that, but basically, the more hated something is, actually, the more, you know, people can potentially be offsides if things reverse.
Yeah. Stephen is just an all-around nice guy and just has like a lot to say. Very bullish on DeFi. Has experience, and yeah, I mean, I enjoyed that segment. Up next, we've got Shiv, the new CEO of Boundless. Excited to talk to Shiv about what he's seeing in the ZK market. I know that you guys are doing some work together in some capacity as well. So yeah, let's get him up here. Sorry for the delay. We're running a little bit behind today. Just typical. Classic.
Big fan of Risk Zero myself.
Yeah.
Hey, Shiv. What's up,
Hey,
man?
how's it going? Yeah, everything's going well. Hi, Nick. Nice to see you here as well. I didn't realize you were doing the call, so this is a good surprise for us.
It was a surprise to me too. Andy needed a special co-host, so just hopped on.
Yeah, Robbie's out this week, so we just doing what we can here. And yeah, man. Shiv, where are you calling from?
I'm actually calling from Seattle, of course. That's where a lot of the leadership team of Zero is based. We are Seattle first company, but as you know from like talking to Jacob and the rest of the crew, we have a strong New York base now as well. But I'm personally based in Seattle.
Sweet. Yeah, one last one before we jump into some of the meat and potatoes here. I know that you were recently brought up into the CEO position of Boundless, which is nothing new from your previous kind of Web2 experience with regards to some of the bigger software and tech companies in the space. I'm just curious about like kind of what's the story behind you jumping into this role, and then how has it been for the last couple of weeks getting acclimated?
Yeah, I think I think it is still a huge step up from my previous roles in tech companies, because I was always behind like a good leader. For example, my background in Web3 is helping manage Avalabs, the company behind the Avalanche L1, and Coinbase as well, where I managed quite a lot of divisions and also like helped launch countries like Japan and India. Wasn't the best launches. We got shut down in India in like an hour or so. But it's always a learning experience. But before that, in Web2, I held quite a lot of leadership positions in Lyft, in Amazon. I worked at Microsoft. I was one of the first EMs for Grab, which is a Southeast Asian rideshare company that a lot of people will recognize if you travel to Thailand or Singapore or Malaysia or any of these places. So that was my background, coming in managing engineering teams that have a focus on like product, revenue growth. My career really took off in the phase when there was quite a lot of capital flowing around. So the question was, can you make your idea work with enough capital? How hard can you push creativity? It was the era of Travis Kalanick. It was the era of Airbnb growing. So that was like a really good experience, and that's how I really cut my teeth. And then got into crypto, of course, and that's always been like a much more interesting journey because the industry itself is nascent. So there is some novelty here in my own learning experience of how do you navigate a new industry, use any institutional wisdom you've garnered from your previous experiences, how do you adapt it here. There are some things that change and some things that never change. I think your big tagline on Twitter, which I really like, is the return to fundamentals. Fundamentals were, of course, forged in Web2. And what we're trying to do is to like recreate them in Web3 to like create a industry that lasts decades and doesn't sort of, whimper out. But with respect to Zero and my journey here, I've been here like a year and 8 months. I helped manage most of product and engineering, except for the two co-founders who I reported to, who are also part of engineering. But coordinating engineering, making sure we're productive over a period of time is something I focus on a lot. As we move towards Boundless, which has a focus on customers, applications, growth, markets as well. Those are all sort of things I dealt with for most of my career. Some people feel in the company that I have an intuitive understanding of this. I like their praise, but it's always a challenge. But it is one that I'm going to try and help navigate. As folks like Jeremy and Frank sort of focus more on the ZK tech, which is of course a core pillar, like a technology pillar by itself. In theory, like blockchain is one core pillar. ZK can live by itself as its own core technology, and you want someone to keep investigating that. And I think in a lot of ways, Jeremy was put on earth to like advance ZK. So I want to make sure like he gets the time and bandwidth to like push that as well. So while I focus on the business side a little bit, which is what Boundless is.
Yeah, man. Yeah, and I think the tides are shifting ever so much in the favor of ZK and in ZK EVMs with Ethereum as well, right? Ethereum just announced this protocol design thing from their foundation, and you put out a tweet saying that ZK EVMs have rapidly accelerated, enabling us to re-architect the L1 to simultaneously support scale, verifiability, security, and censorship resistance. And so it feels like the ZK EVM and ZK VM teams are being kind of like vindicated in this way around, okay, the L1 is very aggressively going towards this kind of like ZKification, this snarkification. I'm curious, when you're looking at what the future of Ethereum is and you're looking at what you guys are building at Boundless, does it feel like these two worlds are coming to intersect ever so more and with a much more direct path than, let's say, a year or two ago?
100%. I think like 2 years ago, I mean, everybody's been early on ZK for a long time. Finally, it feels like we're on time. The train's here and we're ready to get on board. We've bought our tickets, and I think I'm so happy to see the ETH Foundation and all the sort of thought leaders in that space as well align on the goals, if not the mechanism, right? Like when you make a decision on one architectural choice versus another, obviously some folks are going to be unhappy if it's not the direction that maybe they thought the ETH Foundation might make in technology, in specific choices in technology. But the ultimate direction is extremely complementary and supplementary to where we are headed. I will say that 2 years ago, we thought we'd be here in 5 years.
Yeah.
So we ended up speed running our own roadmap. A lot of it comes down to the encouragement of folks like Vitalik, who write a lot of like these blog posts and put out thoughts around where they expect ZK to be or in what form will it be useful. And also generally the competition in the area has heated up as well. When we open sourced our ZK VM, one of the key things we understood, even from a business perspective, is that there isn't a lot of a moat in an open source product. But we need a lot of people to buy into the design. We need a lot of people to validate this approach. And that's happened. Right now, we have like some 30 ZK VMs, a tad more than we thought like could be possible in such a short period of time, but it's good. It means people understand that this is how you platformize ZK. And I use that term quite intentionally. ZK before this was not really a platform. We have Nick here, so like think of it as modularity in a lot of ways as well. Like when you have different layering in your offering, you can actually have different teams work on different layers. You can accelerate the entire product by having parallel work streams making things better. And ZK is going to be doing that. In a lot of ways, ETH Foundation, all chains, like we're not just focused on ETH, like all chains are going to see the benefit of ZK in scaling computation, in scaling rich user experiences, creating more value and utility, right? Like one of the key things that everyone's talking about is how do you create revenue? Well, you have to create utility for revenue. People pay for a thing when they find the thing useful. Otherwise, they don't pay for a thing. It's literally that simple. So, and utility is it's a cost of like function. How do you create function? Well, you need computational complexity. That's literally what verifiable computation brings to you. So I'm really, really bullish on the next sort of 12 months, because every time I say something's going to happen in 2-3 years, it tends to happen in 3 months. I just stopped giving timelines. I'm just going to like keep my eyes on the next 12 months. I'm sure it's going to be amazing for everybody.
Yeah, I don't think people appreciate how fast the ZK space has moved in the past few years. Like I think even people who were bullish on it would never have predicted that we'd be where we are today. And I think a lot of that comes down to teams like you guys, Risk0, for pushing forward the state of the art and innovating nonstop. It's been remarkable to witness from the outside. And as a modular bull myself, generally, like ZK is one of the most important pieces to making that reality possible, where we don't have to have everything on one single state machine, and we can have, just like programs with verifiable state running in parallel and coexisting and interoperating and things like that. I'm curious, now that there's been a little bit more of a wake up or resurgence in the privacy side of of crypto, both because maybe regulation around privacy is changing, but also because I think enterprises and some of the new use cases are coming online. Like, how do you that's the other whole side of ZK, that it's not just about scaling and interoperability, but privacy itself. So how do you guys think about?
Yeah, I mean that's a great question. Like, so I mean the thing is, if you go back whatever 15 odd years when ZK was being studied at universities, the whole focus was privacy. ZK's killer functionality is privacy. It also has this property of succinctness, or having like fixed proof size for arbitrary large computation. That's really what helps scale blockchains. But people completely forget that like ZK was studied under this whole guise of privacy. How do I protect information? How do I give you limited access to whatever you need to have, and so on. I think it's being so. I think there are 2 or 3 unlocks that need to happen, that have happened. One is, of course, Perf is already at a point where we can factor in most privacy use cases. People are willing. It's not like you don't log in all the time. You don't authorize things all the time. It isn't actually that jarring to UX. It's part of the critical flow of path, but it's only a one-time hit. This is something that's well understood in the the Oktas and the Web2 world. When you work in like a large company, it takes like half a second. People are just okay with it, right? So the UX is actually pretty compatible with ZK solutions. We just need to make ZK more compatible with devices, your browsers and your apps, your mobile apps, and so on. There's quite a lot of work being done by a variety of teams, as well as RiskZero, in trying to get to that space. Client-side proving is going to be one of the largest unlocks for privacy-based applications. Once you're able to run stuff on a browser or on your phone without really impacting your user experience, or like keeping it at par with Web2, it's going to become a no-brainer. Now, there are, like you suggested, there are 3 or 4 challenges towards that from an external point of view. One is the regulators. I think I talk to a lot of privacy teams, because if you run Boundless, if you're in the ZK space, a lot of people come up to you and talk to you about that. I actually have a background in compliance and security and privacy. I tell them, well, it's not a two-sided problem. It's not that you are securing me and you get into a conversation with me. There's also the regulator. They need to be like, there's SOC 2 compliance, there's all of these like compliance requirements that you need to fulfill, for which you need to have a broader conversation with the regulators as well, especially if you want adoption and then you want to crack Fortune 500 and like make money off of these products. There's a uphill battle having this conversation with regulators. I think the industry would be very well served if we are able to attract some of the movers and shakers in the security business, get them more interested in the ZK conversation. And based out of Seattle, we actually have some access to some of these folks with whom we are working a little bit on, like, writing specs or RFCs for W3C conferences and so on. It's going to be a little bit of a long game. It's going to be a silent game, one that people aren't going to observe on crypto Twitter, because it's not sloganeering. These guys just, you need to like sit with them for hours and like convince them of certain approaches, and then they want to test it out. They need SecOps to approve. It's going to be a long haul. The ZK teams that are willing to do that work, wait for the year and a half, willing to go to the 20 odd boring meetings that go on forever, scratch your head, come back again. Those are the teams that are get this over the line. The return to fundamentals that Andy talks about, I love that phrase, by the way, return to fundamentals. I'm trying to read it faster. It is about doing that hard work up front to unlock business opportunities. There is this like small myth in our industry where you will build and they shall come. Yeah, it's never happened ever in the history of computing. You got to build, you got to sell, you got to do all the normal things. You got to sometimes put on a suit and sometimes put on a t-shirt.
Even more so now, right?
Yeah, exactly. Put on your battle armor, get in the game, and keep your eye on the ball. Don't get distracted, right? So there are privacy teams working out there who are similar minded to us. Like, I love chatting with these folks. I love that they have the fight in them to go up and like break through some of these barriers which seem impenetrable.
Yeah. So Shiv, when you're looking at either in this privacy sector or just more generally with teams that you guys are working with at Boundless and RiskZero in the application space, what are some of the use cases or ZK apps, as we could call them, that you're particularly excited by? Whether it's in payments or it's in more non-financialized sectors. What are some of the ZK apps that are compelling right now in the space?
Yeah. I think you'll probably get a common answer from all the ZK players, but because it's actually a larger movement when you go back to the basics of what a lot of these applications are doing. We call them ZK apps or verifiable apps or boundless applications. They all kind of mean the same thing, which is how do you run an application as you would in Web 2, but somehow get the guarantees of Web 3, the properties of decentralization, the properties of censorship resistance in the periods of the application that you care about or with the data that you care about, right? So if there is a dog walking app, I'm not super concerned about censorship resistance. Well, yeah, whatever, man. Like, just take my dog out for a walk and somebody works. Like, thanks a lot. But if it is a financial application, if it is something that deals with PII, if it deals with sensitive information, how do I know you're not doing something weird? How do I know you're managing my money effectively? How do I know that you are taking my instructions and following through in the precise manner in which we signed our contract, either it's terms and conditions or like specific contracts? If you actually go at a high level, all of these actually look like state transitions, right? In a state machine, they kind of like basically state transitions. It's like, oh, applied a bunch of rules. In this case, this was the transaction type and your state changed. ZK is really, really good for like verifying state transitions. That's what ZK EVMs are. All of these like bubble up to the same design. We're seeing some standardization across all of these applications and how they go about doing state transitions and how they verify them in ZK EVMs. And that's fantastic news, because once you tell us to optimize for a thing, I think the industry, the ZK VM industry, has shown that if you tell us this is what it looks like, we will crush it. Like, real-time proving was not supposed to happen for like a really long time, but everyone's like, this is what the block looks like. Oh, okay, then watch us, hold my beer, right? Like, it just go and just crush performance there. Once we start seeing the pattern and VR with these state transitions and how exchanges want to operate, how DeFi applications want to operate, we are going to try and focus in on that, provide other precompiles or like focus on how these are implemented, or even get our hands dirty and start building some of this stuff ourselves to like feel the pain of our customers, which is something like I highly encourage all young teams to do, which is don't just yap about it, like get in there. Like, you'll realize how hard it is to deploy your own application. If you deploy your own application, it's always hard the first 200 times. You gotta like feel that pain. We're learning a lot about these things. Again, like the next 12 months, you're going to see optimizations at the ZK VM, at the implementation layer, which is boundless, or the layer at which like people build ZK applications to make lives easier and faster. If you want a bet from me, like in 12 months, I think there'll be something like a Ruby on Rails for ZK applications, where the people will be like, don't worry about any of this middleware. You don't need to study ZK anymore. Just write your application. Here's the APIs that you need to use, and people will be writing hello worlds in like 30 seconds and so on. And that's going to be like a massive unlock when you're able to do that. People who are maybe in my age group remember when it was quite hard to write an actual web service. You have to download a stack called LAMP and write your application in PHP. That was around the time when Facebook was also written. Ruby on Rails and Python with Django, all these frameworks showed up. And overnight, everything was a microservice. I bought my house and pay my mortgage with like the microservices I built in my earlier days. Like, it's going to be that, and I'm really looking forward to that.
Yeah, I think ZK VMs as a whole just brought generalization to the space away from circuits, and now it just feels like once you kind of open that can of worms, it's just going to be accelerated and just pushed to the logical extreme of ease of use and ease of deployment. So I'm excited to kind of watch the boundless journey as you guys go to prove Ethereum's entire consensus in a single proof. I know that to prove an L2 block right now is getting cheaper and cheaper to the point where it's actually kind of feasible to just make an optimistic rollup into a ZK rollup just on your own. But once we can get that on the L1, then I think that's when the Pandora's box really opens up for interop and for just general pace of solving some of the problems that are plaguing some of this like modular design of Ethereum's architecture when it comes to scaling.
I have two really quick questions on that stuff that I'm just curious about personally. One is, how do you guys see the cost of proving currently on like, standard EVM chains? And do you still, because I see a lot of teams opting for fault proofs rather than just fully ZK proving, because that's a cheaper way to operate. And then the second is like, where do you think real-time proving is today, and how close are we? Because that's really the thing that's going to unlock like interop that we couldn't have really fathomed before.
100%. So let's talk a little bit about cost. I think there's two things here. One is, of course, the raw cost, and so the most important innovation from the Web3 ecosystem for me is really the launch of tokenomics to like create subsidy effects in a network. So costs are going down. They're on a massive, like the graph looks hilarious. You have to expand on the x-axis to make the graph look a little bit more real worldish. But the cost of like ZK proving are coming down, and with people launching ASICs and so on, either by the end of the year or early next year, you're going to see costs come down even further. But another way to actually like bring costs down is through subsidy effects. So that's what Boundless is actually designed to do. Our innovation in how we actually create the network and keep all the provers incentivized is through a mechanism called proof of verifiable work, which actually creates more incentives for doing work and participating in the network, which provide a subsidy effect to proving already. And similar sort of mechanisms, of course, proof of work being one of them, is already subsidizing, it subsidizes the cost of Bitcoin by 95%. And so we see the subsidy effect being not just big, but like massive. So if something is 1/20th the cost because of tokenomics, that's going to solve a lot of the cost problems. But irrespective of that, the cost of proving on raw hardware is also coming down. It's going to continue coming down. There's actually a bunch of teams, Fabric is one of them, who are like amazingly invested in like making this future happen for us, and that's great news for us, right? The other one is real-time proving. I'm going to say most teams are there. They're within a line of sight. They can't write code fast enough, right? It's like the question is going to be like, oh, can we just test it out properly? Now the question is, how many blocks can you like guarantee are going to be like proven in under 12 seconds? What is the fattest block? What is the theoretically fattest block that we can make? People are already moved on to that question. I think internally we've achieved real-time proving with like a setup even in the cloud, to be honest, but we want to like actually publish a config. So we are completely open source, our prover is open source, nothing about what we do is closed source. So we'll give you the code. We'll also tell you how much money you need to spend and what machines you need to get, and you can become a real-time prover at home. We want to make sure that feature is also available so everybody can run and verify that this is happening. This is going to happen in like a matter of weeks, mostly because like, we just can't type fast enough. The path to real-time proving, in my opinion, is mostly solved. I'm glad we're still celebrating it on Twitter. We want to make sure everybody understands the impact of real-time proving and what it does for people. I think Justin's been like a really good spokesperson for that. I know a lot of like privacy hawks are like, oh, real-time proving doesn't matter for me or my project. It matters for the ecosystem. I'll also say it's a 4-minute mile in a lot of ways. Like now that we've broken it, everybody. I was in Japan and at a crypto conference, and obviously not everyone speaks English. A lot of people came up to me, brought out their phone, typed up a bunch of stuff, and they were like, "Take a look at this," and all the questions were about real-time proving or how fast proving. It's the 4-minute mile encourages people to like think about a thing and start taking it up. It's a performance milestone that doesn't necessarily by itself stop us from getting faster or investing more in performance, but it just encourages everybody to think about what's possible. And I think that has started happening. That to me is the most important signal of all. It's like builders are like, oh, it's not some weird thing that I don't need to worry about. It's happening now. I either get in now or my competition's going to eat me. And that's why I feel like Boundless is so well timed as well. Our ability to make DevX better, cheaper, faster, safer, more secure, more trusted, all of these things put together, it's going to encourage more boundless applications, more verifiable applications, and overall just lift the entire system up. If we have a lot of killer applications, I think all of us would love to compete against each other in that sort of scenario versus go in a circle with 40 successful companies at any given point and go in a circle again and again. The cycle to be different.
Yeah. Well, Shiv, I appreciate the insights and the time today. It's been an absolute pleasure. Again, as we roll towards real-time proving and again, proving Ethereum L1 entirely, I think we'll see a lot of these problems that are, as I said, kind of have Band-Aids on them right now in certain sense that are working, but can eventually be solved in a more, concrete manner. So appreciate your time and insights, and we'll see you soon, man.
Yeah. Thank you. Thanks, Andy. Thank you.
All right, Shiv. Man, every time I speak to people from the ZK land, it's just like it's always just okay. This is I'm bullish. We're gonna solve everything, but it does sometimes feel that like people just apply ZK as a solution to like create a problem as well. Sometimes I don't know how to. It's like I don't know. There's an interesting framing. I'm not saying that Shiv and balance, but it's just that. Oh, we have this problem. Let's just put ZK on it. Yeah, it doesn't always work that way quite yet.
I've definitely seen narratives like that, but I mean, the real applications of it are like everywhere. And they even go outside of crypto. You know what I mean? Like when he was talking about the privacy stuff and client-side proving, that's going to be used, outside of blockchains, for maybe even Google, right? They released that whole thing about their ZK identity thing. Yep. So this, I mean, ZK is real. It's a new computing paradigm, like full stop. So never fade a new computing paradigm. That's my.
Don't let the Twitter FUD get to you. Up next, we got Omar, the founder of Chaos Labs, doing great work in DeFi. There's quite a bit going on in the DeFi world today. We'll get him up here and yeah.
Hey guys. Hey Nick. Hey Andy. Can you guys hear me?
Yeah, man.
Yeah.
What's going on?
See you. Thanks for having me. Yeah, all good. How are you guys?
Are you in the city today, in the office?
Yeah, I'm in our New York office in Brooklyn.
Yeah, man. You guys are doing some events around permissionless, right?
I think we're gonna have a few things running in the office, and if you're in town, definitely let us know. Would love to hang out in person.
Yeah, man. Well, we brought you up here today because you found yourself in the middle of a lot of fun Twitter content over the last week or so. I saw this tweet that you put out around some of the Oracle problems that a user had last week, and then obviously you going back and forth with some of the Chainlink guys. Maybe you could just like give us the TLDR of what Chaos Labs does, and then kind of what happened last week and your perspective on that, so we can have a mental refresh as to kind of the state of things there.
Yeah. So. Happy to jump into it. So generally, Chaos Labs, I think what we're known for is being the leading risk platform across on-chain finance. So over the past years, we've built our platform that has powered several trillions in volume, settlements, liquidations, generally on-chain credit in volume. And it's really kind of the engine that's powering a lot of applications today, like Aave, GMX, Jupiter, EtherFi, Renzo, DYDX, Layer Zero, and a great group of teams who we work with. And the way that we kind of provide our real-time data is via the Chaos Oracle. So we launched that about a year ago, a little less, around 9 months ago, growing really fast, rolling out across all the protocols that I just mentioned. So that's like the context. Like we spend a lot of time in risk, in security, and understanding markets, and also just like shipping products that are used by protocols today.
Got it. Okay, and so you guys are also bringing in this kind of new Oracle design around this AI Oracle, and so part of this marketing campaign for you was to put this tweet out because Chainlink was under duress after there was an incorrect price feed. And some are arguing that it was a result of a lack of liquidity on a certain token. Others were arguing that it was a Oracle problem.
Yeah,
maybe we could just broadly understand like what that like problem space was, and just kind of how that even happened, to better understand kind of like how oracles are so important in the DeFi landscape when it comes to liquidations and pricing.
yeah, for sure. So I mean, I think an area where we spend a lot of time writing about is risk, market dynamics, liquidity, game theory, and security. So this definitely kind of like falls under that. these instruments, particularly against oracles in this case, are responsible for powering every single transaction like in the market, are ultimately kind of touched in one way or another by oracles, but they're not really well understood. So kind of taking a step back, in V0 of like on-chain finance, like really the vast majority of volume was attributed and powered by kind of feeds or products that were pricing Bitcoin, Ethereum, and just like major alts at the time. And really like the main challenge in bringing off-chain data on-chain during the early days of kind of DeFi summer was simply having a reliable feed. Because anyways, most of the activity and interest was around things like Bitcoin. And when that's the case, you can simply take like a median. A median means that like you sample a price from like 3, 4, 7 different venues at once, and you take what's in the middle. And Bitcoin is like traded pretty obviously really heavily across the world. So it's pretty representative. But what we've been seeing over the past like 2 and 3 years, and this was like part of like the motivation that gave us conviction to continue building in this space, is that tokenization is exploding. A, in cross-chain assets, but B, in also tokenized assets. Now, when you have tokenization that's exploding and living across all of these blockchain networks, one of the challenges that you have is fragmentation of liquidity. And what fragmentation of liquidity manifests itself in is basically thin liquidity and prices, which can move with relatively small trades in a significant way.
Yeah.
Specifically, that's what we saw last week on Avalanche with the DE/USD feed that Chainlink had shipped. But I will say this is like not like a new thing. I think previously like Mango markets had the same issue, and kind of like every week or two you hear something in the news about feeds that are being manipulated or moved in ways that they shouldn't be.
Yeah, I think so. I mean, I mean, it's also part of the you know, if you want to call them exploiters or, you know, people that see opportunity, it's part of their kind of job to keep the system in check by trying to make these things happen to further, you know, further make teams build out more resilient systems, right? And I think that's a lot of the work that you guys are doing as well. And it just so happens that this is something that is a very highly competitive space with regards to oracles and this kind of security models. It's very much like a you know, it's like a Lindy thing, right? If you are very strong for a long period of time, that is the most important measure, I believe, right? And so I think that's something that a lot of teams try to create.
I'll just say on that, because I think it's important. Like, it's not only exploiters, like, right? Like actually, like what moved this price was just a regular arbitrage trade. So it wasn't somebody that was manipulating Euler or something like that and trying to like screw users. It was literally just a trade, balancing market prices. So I think that makes it even more important, right? Because like the feed, this is something that happens as a natural organic course of kind of markets and trading. And just a feed that needs to kind of encompass that in terms of its design. So this isn't some like weird edge case where somebody kind of took a lot of resources to manipulate and hurt users. It was a side effect of something that happens organically in the course of a market.
Okay.
And just in terms of one thing about the lindiness is like, yes, lindiness is important. Like obviously you don't want to like depend on something that's completely untested, but all of this stuff is like really asymmetric, right? So like one bad block, one bad print of an oracle can cause losses of hundreds of millions of dollars. And lindiness is maybe like a proxy for security, but you see time and time again that if you're not continuously like innovating, updating the oracles, the designs, the algorithms to meet the market where it's at, it doesn't mean that you're going to be kind of robust in the face of these things. So lindiness is a good proxy, but you like protocol founders, developers also need to understand, is the oracle designed to handle my use case?
So for those who are, you know, somewhat involved on chain using DeFi, what would you say are the more resilient designs or protocols today, either that Chaos Labs works with or that are just in existence as a whole? And then what really makes a protocol resilient from this smart contract risk perspective that I think a lot of people like myself who are involved on chain, like 2019, 2020, we kind of learned the hard way quite a bit, and somewhat reluctant to try every new thing now. But I'm just curious, like from the lens of DeFi today, where are the most resilient protocols standing, and what do you look for when it comes to these kind of risk assessments to make a protocol resilient on chain?
Yeah, so I'll say this, like when it comes to like the nitty-gritty of like an Oracle design, it's my view that the user shouldn't have to like be an expert on the Oracle design because it should just work. And the onus of that is like on the teams that are building the oracles or the integrating engineers on the application side. Having said that, I think there's like a few buckets that like you can look at. Like today the market is advancing and getting quite sophisticated. And in 2020, there was just literally like one type of push oracle that every application adopted. But today there are different requirements. You have like high throughput, low latency chains that enable derivative applications like perps. A perp application needs a super sensitive, super low latency application because you're trading on really high leverage. So if you're trading on 100x leverage, any deviation or misprint that you have, you multiply that by 100. Right, so the requirements that you have there are very, very different than an Oracle for an application like Aave, for example, that every loan is over collateralized, and you have kind of like this margin of error and can update with kind of larger time. So it depends, I'll say. What I will say, and then the other way to really think about this in an easy manner is this: if your team is using like only major like crypto assets that have heavy liquidity like Bitcoin, Solana, Ethereum, some of the other L1s and L2s, you're probably fine taking like a simple oracle that does like a median because it's traded heavily enough such that the kind of the venues and centralized exchanges where the price is being discovered is reflective. If you're experimenting, if you're an up and coming application, you're experimenting with new tokenized assets, something that lives across many chains and has fragmented liquidity, and you're depending on an on-chain pool or some venue where there's very little volume, that's when you absolutely have to have some special kind of consideration or thinking about how this feed works, because it's just simply a matter of time until you kind of start printing kind of spikes and prices which are not representative or expected. I hope that breaks it down a little bit.
Okay, so the only other like idea that I'm starting to get around, and Nick and I have been talking about this for quite a while, and especially over the last like 2 weeks, is, you know, you mentioned perp dexes, but you know, I think CLOBs, these central limit order books, are very are going to become more prominent in the space. You know, Hyperliquid is really pushing it with theirs, again, more perps, but we're going to see a ton on Mega ETH, on Monad, on Celestia. There's going to be more of these very high performance CLOBs come to market. I'm just curious, what is your broad kind of stroke opinion on CLOBs? What's your take as far as their what that is going to do to the DeFi market? And then what are some of the potential infrastructure changes that are going to be needed to require, or, you know, that are going to be required to actually be able to facilitate this type of high throughput transactions?
Yeah, no, it's great. I'm super excited for clubs, and we're starting to see it too with all of the teams that we're working with. We're working with a few of the names that you just mentioned. The club in itself, though, is just like, it's like a data structure or like way to kind of store the orders. Here, you're still kind of exposed to the same challenges and security issues. And it's just really dependent on like what is the depth of the club. Because it's great that you have a club. If there's 20K liquidity in your book and you're determining the price based on what the mid is there, then you can easily be manipulated, right? So it's the same type of solutions and considerations, looking at the depth of liquidity, the activity of the market, how efficient is the market that you're going to need to employ. It doesn't go away with the club, but hopefully it should allow us to kind of price things in a way that's more efficient from like gas and like precision moving forward. So it's great for the space. Oracle, like AMMs we all know what the challenges are around that. But it doesn't like absolve of like the security checks and risk. And a good example is like the NASDAQ, right? So like even the NASDAQ or a lot of these kind of stock exchanges are using clubs behind the scenes. If we're going to oversimplify, but they also have things like circuit breakers for when prices are too volatile or moving too quickly to protect the users. So I think if I had to say like one thing that for anyone who's like building an Oracle, building an exchange, building like a lending market, yeah, we just always try and look at it from the perspective of like the user, right? And like if you have like a stablecoin market that you're like looping, is the user expected to get like liquidated if the stablecoin hasn't really like depegged or nothing really happened? And like the answer is no. So okay, like you should work to kind of like design a feed which reflects that. And here it's like you also don't need to do it in some centralized like crazy way. Like we do this for Aave, right?
Yeah.
We have like a capital oracle which is in production, a correlated asset price oracle, and it takes all these things into consideration. So this is just like part of scaling. It's not even a trade-off. Like oracles can be smarter. You don't need to do it in some opaque black box way. And it's just, I think, the future where we're going to see the next generation.
Omer, I have a question, which is, I think one of the things that one of the selling points of Clobs essentially is that the latency is so much lower for trading. I'm curious if like can oracles actually keep up with the speed of Clobs, and like is that a problem that you think about?
Yeah, so I mean, like the speed and the latency is just all downstream of like what are the block times, right? So I mean, like your upper bound for your speed is like what is the block time on the chain. I think that's like less of the issue because when you're using a cloud, you're using typically you're using the price that's like the mid price in the book, and then you're using external like mark to market prices for things like funding rates, right? So like they should update like in theory at the same cadence, like the mid price of the book and the price that you're fetching from the oracle. So it shouldn't be an issue. And this is exactly how the centralized exchanges work too. So the paradigm is there, yeah. But you do need a fast oracle. Like if you take like a push or like the oracles that are legacy are not built for this type of speed. So you need to kind of redesign your oracle, but there's no like fundamental issue with it.
Interesting. Thank you.
Yeah, and so there has to be enough there has to be an oracle update for every block, right? Or does it have to? Yeah, okay. So like yeah, that's
if it's a heavily traded market, yeah, like it should be like every block. Like perp dexes and derivatives are just really interesting because that question of like leverage. So if you look at a chain like Ethereum, there's like a 12-second or 7-second, I guess depends on the congestion of the network block time.
Yeah.
You would get absolutely wrecked if you had prices update every 10 seconds on a perp market because basically you'd have 10 seconds where you would know what the next price would be. You can take a 100x lever trade and basically place like a risk-free trade. And that's the reason why perp dexes don't use push oracles. They actually use something that's called pull oracles, and that's moving a lot closer to like what we're going to see in Clobs ultimately too.
Very cool. Omar, appreciate your time and coming on and fighting the good fight. And I thought your last few weeks has been a masterclass in founder-led marketing. So I don't know if beef is the strategy, but I would keep it up. I would keep the Twitter firing. It'll do magic for Chaos Labs, BD, and Inbound. Probably the most successful form, actually. So
just trying to push the space forward.
There you go.
But yeah, I really appreciate it. Thank you for having us on, Nick, Andy. Appreciate it. Cheers, guys.
All right, man. See you soon.
See you guys. Bye.
Man, Nick, last one. It's been a bit of a marathon here, but we got some crazy news from Blockworks on Twitter. There is rumors that Solana ETFs will be passed in 3 to 5 weeks.
That's epic. I mean, yeah, this is not a market to be bearish in, I think, in general.
No.
Congrats. I mean, obviously it's still a rumor, but huge win for the Solana community, obviously. And yeah, I think it's also just a sign of the times that we're living through where I think crypto is going mainstream in a big way. And I don't think it stops at Solana, frankly. I think it keeps going and accelerates. Yeah,
that's the beauty of it, right? Is that like we saw Bitcoin and then Ethereum ETF, and it was very clear that those would be the first two. You know, even Ethereum was kind of questionable. It was like, is it going to happen? And then it was like, yes, of course. And now there's been this long pause. But assuming that we get the Solana one through, that to me then opens up a world where there could be like an index of like the top 50 crypto assets on the NASDAQ or something to that extent. So
something else
exciting times.
interesting to watch too is I think there was guidance last week or something around making staking in the ETFs actually like okay, because I think there are a lot of tax questions around that. So it'd be interesting. I don't know if there's anything in the news here, or maybe we'll have more information when there's a more official announcement. But that's something that I'm paying attention to too. Is like, can we bake staking into these ETFs? A lot of the products in the European markets have staking, and that's a huge benefit, right? To an advantage of like ETH or Sol or any proof of stake asset versus something like Bitcoin. So.
Yeah, and I think a lot of the institutions will want that yield. That'll give them a reason to allocate outside of just Bitcoin as well. So up next, we got our last one for the day. Camilla, good friend of mine, inspired us to start our media company way back in late 2019, early 2020. She was one of the only ones doing crypto media back in the day. Let's get her up here and welcome her up.
Thank you so much, Andy. That's incredible to hear. Like I'm inspired by you being inspired.
It's good to see you. You're one of my favorite Ethereum bulls out there. You've been fighting the good fight as well. We had DeFi Dad on, and between the two, you guys have done quite a bit to push crypto media and Ethereum forward in general.
Well, yeah, I try not to frame myself as an Ethereum bull. I try to cover DeFi objectively, but you know.
Yeah, at 2K, but at 10K, you're gonna be like, I was calling it.
Maybe we'll see when we get there.
Yeah, well, thanks for coming. Wanted to just chat to you about the state of things in crypto media. You know, what's going on with the Defiant, what you're seeing more broadly. So just kind of like kick off, how's the Defiant going? What changes have you seen in crypto media? Have you been paying attention to more of these like mind share things that you know, Kaido's been running and that these companies have been running? There's also been a large shift towards institutional interest and appealing to that crowd. I'm just curious kind of like where your head's at and kind of what you guys are focused on and how things are going.
Yeah, so at the Defiant, obviously our focus has always been DeFi. And I think, you know, it's become more clear than owning a niche in media is the way to go. I think it's extremely hard to be a generalist and be successful as a media company unless you have infinite resources, which we don't. So our, you know, deep focus on DeFi, trying to really level up the quality of the content that we produce, with a new studio here in New York. So we're hoping to do more and more IRL interviews, you know, just like more highly produced podcasts. So really looking forward to that. And then looking to grow on more DeFi adjacent niches. So, you know, stablecoin is a big one. We might have, you know, an announcement soon on that front. So that's what we're looking at. And I think you're totally right that there's a lot more enterprise and institutional focus. So that's kind of a new audience that we're looking to target as well. I mean, we've been super degen focused, but now I think there's like this great bridge happening between DeFi and more like TradFi. Like we see BlackRock and Franklin Templeton launching tokenized funds. So I think there's a lot more appetite for DeFi news coming from institutions. So we're you know, definitely looking to get that piece of that audience too.
Very cool. Very cool. All right. So kind of down into the meat and potatoes today, we had quite a few cool tweets that we found from you that I wanted to get your take on and Nick's. The first one is this Polymarket and X announcement from a couple of days ago. Actually, yesterday you put out this tweet. Polymarket plus X is rightly hailed as the triumph of a blockchain-based application that has properly gone mainstream. Yes, it's a Trojan horse of crypto, but no, it's not the future of news. And so I'm curious what your perspective is on this partnership more broadly, and why this is not the future of news.
Yeah, totally. So I didn't want to seem as throwing shade on Polymarket at all. I think what they've accomplished is just remarkable, kind of really bringing crypto to the mainstream without users even knowing that they're using crypto, which is, I think, what everyone tries to achieve. So I think they've done great work. But in their announcement with X, I was, to be honest, a little bit annoyed because they said, let me find it. So they said the next information age won't be driven by 20th century media monolith. It'll be driven by markets. Our partnership with X marks a new chapter in the internet. The future of news is optimized for truth, rooted in transparency, and anchored in reality. So the reason why this kind of annoyed me a little bit is because I've been hearing for many years now, big tech titans kind of proclaim the death of news, the death of journalism, and for journalists and media to be replaced with just people tweeting on their armchair, and tech and like AI and algorithms. And I think, yes, like all those things are great together with professional journalism. I think AI, I think prediction markets are great to provide additional context, but you still need actual news reporting. Like you need journalists to uncover, the things that people want to keep secret. The actually important stories: fraud, corruption, backroom dealings, like all those things that are not just willingly announced on X or tweeted or posted on a blog. You need like deep sourcing, you need deep research, you need human reporters to do that work. And I think for people not in the media business, it's really overlooked how hard that work actually is.
So I have this theory that I think is tying into what you're saying, which is just that there's this really advanced, accelerated pace of moving towards speculation and financialization of a lot of things, and I think that's what this collaboration is more so about, right? It's like this markets and media. It's like the gamification and the like financialization of news, of outcomes, of all these different ways of basically like creating a market for a certain event or a certain outcome, and I just think that we see this more and more accelerating. And I'm personally trying to figure out how to be positioned to be like long on that trend. I think obviously if you invested in Polymarket or maybe Kaido as an example, or maybe some of these types of new platforms, but that's generally like how I saw it. But I understand your perspective, right? Right, we will see the overall kind of like dethroning of like the Atlantic and the New York Times is gonna,
I'm all for that, for sure.
Yeah, personal creators are now kind of taking those roles in a way. I think more.
Yeah,
like people want to buy from people more now than ever.
I think so. I think that's true, but I think it would be a huge loss to society if all of news and content comes from just individual creators and influencers and actual professional journalism, like the work of like reporting, uncovering scoops, fact checking, being balanced in your articles. Like if all of that went away, I think it'll be a huge loss to society. So, but I agree that there's this kind of financialization of media and news, and I think that's great. I love DeFi. I love bringing kind of a money layer to the internet, and I think that obviously includes news. But I would love to see more experimentation on the actual media model side of things, on how could we use that financialization of news to reinvent or improve our current broken media models. Like, can we use these markets to incentivize this like actual investigative journalism that's so needed and that's dying? So that's what I'm interested in, and I'd be super long a project like that.
I think the interesting thing is that kind of prediction markets can incentivize that, right? Or if there's a market that is really offsides, and there's an incentive to try to find out information that no one else is aware of, almost like to be an investigative journalist, uncover that, and you can like take a position and actually profit off of like what you discovered. That's kind of an interesting angle, I think.
I agree. I think the issue there, like I say in my newsletter, hashtag subscribe, but when like what I say there is that right now, current prediction markets are focused on predicting known outcomes.
Mhm.
So I think, yeah, Nick, what you're saying, I think it'd be super interesting to share prediction markets that's focused on the opposite, on on uncovering unknown, or like uncovering secrets, which I don't think there is any platform like that yet, but we'll see.
What would an example of that be? Like you could make a prediction market about the Epstein files and then have incentivize people to find out. I don't know.
Yeah, like you hear all sorts of rumors on crypto Twitter, but they haven't been verified. Like I don't know, like say before the Tether was forced to be more transparent with its collateral, there was this overhanging concern on crypto that Tether was insolvent. So like an obvious market to create would have been, is Tether insolvent? Like it's not a known outcome, it's a secret. But if you allow people to bet on that, maybe that can actually be uncovered. So I think it'd be really cool to like incentivize secrets to become public.
Interesting, very interesting. So outside of some of the larger media companies of the world, who are some of the other must follow media minds and personalities in our space that you look up to?
Well, let's see. I think Laura Shin, she's an OG. She also has her own media company. Also started out in kind of traditional media. So really respect her. And she always has really top-notch guests. I love her interviews. So yeah, her for sure. I follow Nick Carter. I love his takes and research. Who else? I'm kind of like blanking.
Nah, it's all good. You just put you on the spot.
I'm a big fan of Laura Shin as well. I feel like she also is not afraid to interview people and stick it to them. You know what I mean?
Yeah,
like, she doesn't sugarcoat. She just goes in and tries to be unbiased. I have a lot of respect for that.
Yeah, same. Also want to give a shout out to Christine Kim, who recently quit Galaxy to start her own Ethereum newsletter. And yeah, I've known her for a long time. She was at CoinDesk before. She's a really good researcher. So yeah, shout out for people who want to go really deep on Ethereum. Her newsletter is great for that. I think Packy McCormick is also great for kind of media related stuff. I don't know. Yeah, other like great crypto journalists, Nicholas D, Michael Del Castillo, Zach Seward. I don't know.
There we go.
I'm leaving so many out, but I mean, there's a lot. There's many of us.
Yeah.
crypto journals.
All right, coming back towards the EF and Ethereum, there's this new EF DeFi pivot around DeFi Punk, which you wrote a bit about in one of the newsletters. I think it was last week, basically around this new term for the original DeFi promise, right? DeFi Punk, and then a new treasury allocation towards supporting this effort. I'm curious what your take is on this, and who are some of the most exciting builders and projects leading this DeFi Punk thing and this kind of like pivot for the EF?
Yeah, I thought this was huge. First, because the EF was in the context of them publishing their treasury strategy. for the first time. And the EF has traditionally been super cagey and secretive and opaque. And I've been a huge critic of this. Like, Ethereum is supposed to be open and transparent, but the EF has been not that at all. For my book, The Infinite Machine, that was like one of the hardest interviews I did with Aya at the time. Like, she did not want to give anything away about finances, about like org structure, and I'm like, come on, like, you're supposed to be transparent. Like, what? So yeah, but now there is this whole shift, and beyond just the EF and it's like transparency and so on, but more broadly on Ethereum, after a really big push from the community who just like wasn't happy with how things were going. I think mainly because like the ETH price was underperforming everything else, honestly. But in any case, this treasury policy was a great step forward because it gave more transparency on how the EF will handle its treasury going forward. In the past, it was seen to just like opportunistically sell ETH whenever kind of the price rose. And it proved to be very good traders and like perfectly timed the market. But it wasn't great for a foundation to be just like trading ETH, right? So now they gave like a specific guideline on like how and when they would sell. But beyond that, what I thought was really interesting in this document is that they say they will use DeFi as much as possible, and they came up with this new term, DeFi punk, which it kind of the meaning of it goes back to all the original promise of DeFi when it started, which is it's supposed to be non-custodial, permissionless, open, censorship resistant, and now they have this new aspect of it, which is private, which now there is a technology to do that. When DeFi started, we really didn't have very like CK technology wasn't very developed, but now it is. So this was a huge shift. Like, before, the EF would never talk about DeFi. Vitalik kind of dismissed it as kind of this thing that's a bit of like a little bit scammy. Like, when I had him on, whenever I had him on my podcast, like I asked him about DeFi and I asked him about like, hey, like what are your favorite Ethereum use cases? And it was always like, oh, like public goods or like governance. And I'm like, come on, like talk about DeFi.
Yeah. Kane would get mad too, right? Like, Kane and him had this public kind of like clash, I think. And then I remember speaking to Kane about it. I think it was probably about a year ago. And it was like, why won't Vitalik or the EF recognize DeFi? And it was this very like negative perception, right? Yeah. As if it was just like this gambling on-chain kind of gambling thing.
So it was so weird. And it's just crazy. Like, DeFi is the thing that makes Ethereum tick. Like, it's the heart of Ethereum. It accounts for all, like, most of its revenue, all of its TVL, and it's by far its most successful use case. So, it just like, it made no sense. Like, they should be so proud that this platform is what encouraged like one of crypto's most successful use cases. Yeah. But I think they're coming around to that now.
Yep.
And yeah, so I think that this was a really bullish shift, and the plan is to actually deploy most of the ETH that so they're holding 2.5 years of runway in fiat, but outside of that, their goal is to deploy all of their ETH in DeFi, which is huge. Like, they have the EF is holding over $600 million dollars now. I don't know what their runway is, but whatever like is left over from their 2.5 years of runway will be deployed in DeFi, and they already made a first move in that direction recently. So yeah, I think it's a really good sign coming from the EF.
Yeah.
So my hunch on why both potentially they were, you know, I was so opaque when you were interviewing her, and also very much why they did not deploy into DeFi and did not endorse it, I think, is regulatory. They're like the regulatory perspective on DeFi it's a very hot like topic that I think they didn't want to endanger themselves. I think in general, if you look at Ethereum's strategy, Ethereum Foundation strategy, it was very sort of risk off from a regulatory perspective over the past, I don't know, 8 years basically. And I think that's a lot of why they also couldn't struggle to execute as quickly as other teams and other protocols. And so I think that's another reason to frankly be super bullish on ETH is coming into this new regulatory paradigm. They're shedding a lot of that baggage, I think, and they're moving in a way where they're going to execute much faster, and they're going to endorse these applications because they no longer have that sort of, you know, thing hanging over them of like, I don't know, the SEC is going to come and make our lives a living hell. So I think that's like the simplest, like they're not dumb, right? Like there's a lot of really smart people there. I think it was just they were forced into that. Into doing that. That's my own hunch. Again, I don't. Maybe we can verify this with a prediction market. I don't know.
Could be. Yeah, but in any case, like who knows why that was the case? But I think you're right. I think it's a reason to be bullish. DeFi more generally is just the regulatory shift that we're seeing. I think it's great news for crypto broadly.
Yeah. Camilla, appreciate your time today, and always been a fan of you and the Defiant.
Oh, likewise, Andy. It was a pleasure. Thank you for having me.
Looking forward to your in-person pods and more work as Ethereum comes up from the ashes here. And I appreciate your bullishness. It keeps us all quite bullish as well.
Okay. Amazing. Well, thanks again. A pleasure being here, and maybe you could come on my podcast soon.
Sounds good. Thanks for coming. See you soon. All right, Nick, the marathon's over. Welcome to a day in the life here. That one went a little longer than it should have. We had some technical stuff going on, but
yeah, I don't know how you do it, man. This is like it's really intense. I mean, it's nonstop, but it's super fun too. I feel like I'm being forced to learn you know, so many different things that are happening in the space. Like typically I kind of just stay in my lane in, you know, specifically Celestia ecosystem, modular blockchains, and the teams that we're working with, applications that are being built. So it's fun to like open up the aperture a little bit and see the space from a higher perspective. So you guys are lucky in a sense, but yeah, it's a lot of work. People should not discount that.
Yeah, I mean, we had you know, VC, media, builder, found, like, it's just like constant, just like, and it's a different conversation each time. It actually makes me feel like going back to starting podcasting again. Like I get a little nervous. I'm just kind of like questions, you know, timing. Like it's far different than just, you know, having the hour-long conversation where you go deep and just like kind of, you know, it's just faster pace. And yeah, I mean, it's fun. So it's been a long one. Appreciate you joining and filling in. And yeah, I mean, you're welcome back anytime, man.
It's my pleasure.
Alrighty. Thanks, guys. And great stream. See you guys later in the week.